Sorry, I'll say that again. In regards to technical analysis, what do you think are you currently having issues or challenges? Doesn't matter, will be risk management, point of entries, point of exits, during, before, and during trading. Okay. Any questions? Okay, I'll give you guys about a couple of minutes, and then if you can either share it with me or type it in, that will be awesome. Okay, thank you, Jared. All right, less patience and fear of losing once the trade becomes positive. So move my stop loss to positive point and the trade loss due to price move with small profits. Okay, no worries. Excellent. Thank you, Jared. Thank you, Bala. Mandeep and Scott, how about you guys? What challenges are you currently facing with technical analysis? If you're still there, Scott. Likewise for Mandeep. Okay, let's go through first issues allowing winners to run and adding into positions. Cool. Okay, let's focus into, let's take the euro for example. I'll leave the moving averages here, okay, guys, because this is simply a form of a guideline too. So, how can you allow more winners to run and add into positions? Well, this will go through now when it comes to more of the advanced technical analysis part, where you're identifying bigger time frames, such as going through like the weekly and looking also at the monthly. So monthly, for example, you know and I know that it's been dropping since 2008. And if we look at that, so you notice you have, it's channeling between two points. It's oscillating. So that will occur unless they need to retest 120. No, that's not 120. 105 from 2017. And as far as we're concerned, it could keep dropping. If they're going to keep increasing interest rates, then the price will continue to go further to the downside, right? So one, identifying the trend. What is the overall trend? The overall trend on a bigger time frame is what? Well, to the downside. We can establish that. So if the bigger time frame is down, and also looking at current, so for the past 2 months, and notice December, October was a big drop. When there is a big drop, this could be just be correction before continuation. And if we're using the moving average as a form of a guideline, touching the 8 or the 10, then potentially it can drop even further. So that's based on the monthly. Okay, so far, you follow me, right, Jared? Bala?
Yep.
Hey, how about Mandeep or Scott? I don't know if you guys are still there. Can you guys hear me? Probably sometimes people leave their computer. All right, going through now on the weekly. So what was where was the price last week? Well, the price was very strong. Also in a downtrend. It's an uptrend from 2017 to 2018. You can see that. And then from beginning of 2018 to where it's at, it's still also on a downtrend. But mind you, this could also be a correction from this impulse before it may continue to go up and then down once again, because the overall is down. So medium is down, but at the same time, coming from there, you have a lower high. So if sellers are already in and it broke through the 8 to 10, what are the odds that it will continue to break? Well, highly probable, because you have a lower high. Then the next one should be a new lower low. Then the odds they will break through this price of 112.15 is highly probable. So there could be some room in order for this to drop further to 112. Currently 112.98, another 70, 80 pips to the downside. So what's the verdict? The verdict is also down. And then go through now on the daily time frame. Daily time frame started at 115. So based on the methodology, you have an entry to go short from a lower high, also from a lower high with a lower high. So you have a bunch of lower highs. Lower highs, yes, there's a bunch of higher highs, a bunch of higher highs and a bunch of higher lows. Likewise, oops, where did it go? But if you notice though, this one especially broke out. So the odds for this, for price to test, is highly probable from there. So in other words, yes, prices are also already at demand. Can you go short when the price dropped massively, dropping 81 pips right at this point in time? Well, you can just sell. They can, I mean, part of your position size, they're like a test trade, but price is demand. So I won't do it anymore because it's way too far. Preferably if the price would correct itself to where 113.50, 50 pip to the upside, then you can have a better chance making another 150 pips to the downside right there. So what's the verdict? The verdict is that on a shorter term time frame, you cannot go long. You have a higher probability by selling at correction. Correction where? Supply. Okay, so if you entered on this side and you sold, and you have on this side on of a exit, I always like that 80-20 rule, closing 80% depending as well on the fib levels, and then trail stopping to either breaking even or just from the last high and letting it ride to where it's supposed to be. Because if your bigger time frame is already showing pointing to the downside, shorter time frame, they have to correct, right? It can't go straight in a straight line. The only time that will happen will go in a straight line if you have another 2008 event. Other than that, correction before a continuation. It has to correct itself. Does it make sense there, Jared? So double checking
Yep.
the bigger time frame, smaller time frame, getting at correction, being patient. Like in order for this to get back up, probably another, today's Wednesday, Thursday, Friday, maybe Friday or Sunday, right? So you can have there and then tank to the downside, right? So as a form of exercise for you guys, I want you to go through, have a look in terms, actually, that would be part of your homework. Homework would be not back test. Go back to your results. How could you have done it differently? Seeing it right now, how could you have done it differently? And then that also happens with the patience and fear of losing once trade becomes positive. So moving your stop loss above the point at the trade closer to price movements with small profits. So as long as you're doing it, you're making profit, Bala, I don't see it as an issue, to be honest. Maybe the only thing is you take more when it's time to get some more. And then, like, I like that 80-20 rule for me, closing 80% of the positions and then leaving the 20% in there, and then decreasing your stop loss, decreasing the risk almost to zero or positive. Makes sense there, Bala? And then just going through a little bit more in detail regards to same thing, looking at what's the trend, what are the sizes of the candles. Oh, it's very bearish, a lot of force, lack of force, identifying corrections versus the impulsions of a lot of forceful to the candle, like this one could be also be a fake up, in actual fact it's a correction, right? Identifying all those before entering the trade or you leaving it in your position. Nice. Anything else?
I'm all good.
All good. Bala?
Yep. Yes, Lee.
Perfect. You're all good?
Yeah.
Mandeep, if you're there. Jen? Nothing. So, we're to summarize it all. Let me erase this. Is simply to have all this to be in the zone. To answer your question in regards to how do you allow your winners to run, in regards to adding more positions, in regards to your fear, to the anxiety, to the impulsiveness. So they're all connected, right? So checking once again, go through, like Bala and Jared, always use those TCLs. Go through and always be in check in terms of those questionnaire. Like, what am I feeling right now? Why am I feeling a negative emotion? Why do I feel fear? Why do I feel anxious? Likewise for Mandeep or Jen or Scott. So what are those? And then in terms of your technical conditioning, be objective. So objectivity is important. If you can be objective in your conditioning, then it means that your mental conditioning is also, you're no longer, there's no subjectivity in regards to, you're no longer trading based on emotion. Emotion is not being used when you are being objective. You're only going to be subjective is when the ego kicks in based on the fear, or the negative emotion that you're experiencing. Because when you're in a fear-based, are you going to be objective looking at the markets? What do you guys think?
No.
No, absolutely not. So likewise, for your body conditioning, what causes for you to experience that emotion? Then maybe perhaps either tiredness that's causing you stress from worry, which is fear-based. Okay, when you're tired, then why are you tired? Maybe not enough sleep. Maybe dehydrated. So from here, you also need to eat right, rest well, visualize, meditate in order to be in the zone. Okay, very, very important. Any questions from there? Cool.
All good.
And that's where you guys know that's part of our program, right? Well, wow, we finished a little bit more early. I thought it would be more. I guess it all depends on the amount of challenges that people have and the amount of interaction. But other than that, we are done for actually 2.5 hours, which is still pretty good. Did you get something out of that there, Jared, Bala?
Yeah,
Yeah, it's
definitely.
very helpful.
Yeah.
Very good. Jen, I hope you got something out of that. I don't know if you're there listening. Mandeep, I know you had to leave, and I don't know if you're back. Likewise for Scott. Good luck to you guys. Hope you can learn something from there. If you have any questions, please feel free to email us at esttraders@gmail.com or give me a call, 650-390-7104, and we're here to call you back to help you. Other than that, Bala and Jared will see you guys in class. You have a good day, okay?
Thank you,
Right.
Ray.
Thanks,
Thank
Ray.
you, everyone. Yeah. Bye-bye.
Yeah, thanks, boss. See you
Okay,
guys.
see you. Bye.